What's good, everyone? We just wrapped up our training session all about the point of control, which is the POC, which is about volume. So are the buyers or the sellers in control of the market? We just gave all of our students an updated POC today. And so Dad in this lesson is going to walk us through it in a high amount of detail so you can understand exactly where the volume and where the orders are being placed so we can be on the right side of that with our trades. So get your notepads ready and we'll see you on the inside. Welcome everyone. Tuesday night training. We're in for it. Tonight is the night. We have updates as if we didn't have a big enough one already with version 4. The POC, the point of control, has been updated to be even more fine-tuned because you guys are giving us feedback. That's the beauty of this. We all get to give feedback to Dad as to how things are performing, and because he's a wizard with the coding, we can make adjustments and make things better. So it was already on our radar, and tonight we're taking that a bit further. But also, I just want to take a moment to acknowledge that we've had a wave of new members join us in the last little while. So even just this week, today, I believe, or last night, we had Kirsten, we have had Hamish, we've had Aaron jumping back in the mix with us, Robin and Debbie and Maria. So good to have all you guys. And after our recent live event we just had here in Auckland, we also had John O'McIntyre jump in with us. Good to have you with us, bro. Rox, Dylan, you flew up from the South Island, Cody from up north, Sherilyn, and we also had Tyler. So guys, super awesome to have all of you guys jumping in. We're growing. It's a lot of fun. And, you know, on this journey, when you're brand new, I know some of you have already been trading for a while, some of you taking some time out, and some of you are just starting from scratch. And so I want to encourage you, no matter what stage you're at, this is obviously a bit of a reset for you, starting with something again or starting something fresh or brand new. Zoom out, get alone with a pen and some paper and write down your why. Because you need that thing to be super clear as to why you're doing this, why you're going to spend the time on this, why you like, what does it look like? And reverse engineer it even further. Like, what does this look like for you in 2 years, 3 years, 5 years? Like, what does that big picture vision look like when you're able to have this skill nailed and start to clarify that end result so that it's actually a very clear vision, not like oh, maybe I'll have this little side gig. No, clarify that thing with a lot of emotion attached to it so you actually know what you're going for. It's the same as if someone was going off to uni, you know, possibly 6 figures worth of debt to study something, showing up to class, commuting on a bus, all the things for those of you that have went down that road once upon a time. You were very aware of where you wanted to end up one day. And so that vision gives pain a purpose because it's not always all that wonderful. Waking up at times you don't want to be on the charts, learning some skills, setting aside time to learn something new. So you have to have a clear vision. So I want to encourage you, write it down, make it clear, and share it with your family, you know, spouse or someone that you're obviously doing life with so that you can have some accountability and they can be part of this journey with you because it takes a whole family to do this. If you've got a wife, kids, husband, etc., you know, it's not just you by your own some doing this thing. There's other people potentially picking up slack behind the scenes. So I really want to acknowledge them as well. I could never do what I'm doing without my wife in the mix as well, being aware with, you know, kids in bed right now, mostly all settled, but she's probably still having to go in every now and then and check on them. And it's the same for you guys being on the Zoom. I'm aware that it takes a whole family half the time to make this happen. Anyway, more than enough waffling for me. So good to see you guys all on here. And I think that's enough. Why don't we transition into the next phase of this evening? So I'm going to bring up Dad. We've got some updates to go through, and tonight is going to be a banger. So I'm going to find you. I'm going to pin you, Dad, and we are going to rip into it. So there you are. Can you hear me out clear?
Hopefully coming through loud and clear. Welcome all. Our echo ties, welcome too. For the new people who've joined us, all the best for your trading journey. It is so exciting. I just love this whole field of trading. What I've learned, I remember what Ty said last week, just the quote, I can't help, I just been in my mind the whole week. I think he said something like, trading is where money flows from the impatient to the patient.
It's a Warren Buffett quote, and it's more along the lines of investing, but it has been applied to trading too. It is money flowing from the impatient to the patient. That is it.
That is so true. I mean,
Warren Buffett
equals pips. Well, we're going to jump right in tonight. So we're talking about the POC. You should have got the upgrade already. So if you just delete your old indicator, go to invites only, click again, you will load it. And we're going to look at the POC. So I'm going to immediately get into sharing my screen. You can give me permission, Ty. So hopefully this is the one I want. There we go. Awesome. And always got to rearrange my screen a bit. So good to have so many people joining us. Let me just move this out the way in my notes. Got all your beautiful faces up there. Here we go. So here we are. I'm using a 5-minute chart tonight just because of the POC. We can look back, you know, further with a 5-minute. We're looking at 100 pips, 100 candles at a time. So you should be familiar with the POC. And I want to warn you in advance tonight, this is going to be a little bit more technical than usual. but very necessary. So there will be some new terminology. There may be 10 new words to learn, but don't sweat or fret, because basically, if you understand the POC as we have been using it, it's going to be all good. So we have fine-tuned it. It was a little bit too sensitive. Initially, it was chewing so much processing power. Python script, when you write code, you give it a test and it tells you what's drawing all the power. And the old POC was drawing a lot of power. So I tweaked it. It drew less power, but then it was too sensitive. So now I've found a happy balance and it's doing well. At the moment, our force table draws almost all the power. So that draws a lot of power. So you should recognize the POC here. So I'm firstly going to talk about what we should know already from previous training. So basically, this yellow line here is the POC. It stands for point of control. So it's the place where the highest volume has been traded during a season. And it's very important because it basically tells you who's in control. Are the sellers in control or the buyers? Now, I think even my grandchildren will work out here with a small explanation. Who is in charge right now? The sellers or the buyers? Clearly, the sellers are, because you are below the POC. If price was moving up and price was above the POC, then the buyers would be in charge. All right, so it's also the point of equilibrium. It's where buyers and sellers are agreed on price. We may come to that a little bit later. So it's where the market agrees the value's at. So right now the market is actually saying, although price has fallen now in the Dow here to, 47,000. It's falling off a cliff today, almost 47,000. Basically, the value at the moment, most traders are saying actually the Dow's worth 47,255. So that's where the market agrees where the value is the most. So it will be different on different time frames. We'll have a look at that. We've done the addition. But also, it's also a magnet for price. So price always returns to the POC. All right, so price tends to consolidate around, return, consolidate, come back and visit. So it's a magnet. Some people in the trading world will call it the center of gravity, because price always tends to return back to where the POC is. And so remember, our rules are we always trade to the POC, not through the POC. And so generally, the way we've tweaked it now, most signals will come on the right side. But if, for example, you took a counter trend signal down here, if price reversed, you wouldn't want to set a target on the other side of the POC. That is poor risk management. So if we are trading up, we're taking a counter trend, or there is a buy or sell on the wrong side, we always trade to the POC. This would be the target. Very seldom do you ever see price go through the POC without a big pullback and a retest. So we always trade to the POC, we trade to the POC, not through the POC. All right, so it's also huge for support and resistance. Even if we look here, we can see price came down, bounced off this area, came, kind of retested, then once it really broke below, it ran down. So it's huge for support and resistance. It also is a place where price reverses. So often price will move up to the POC. So if price is moving up here, it would hit the POC and then bounce down. So it's massive for pivots. It also can help you enter counter trend signals. I'll talk more about that next week, but this will be a good foundation for that. All right, so generally the POC is what we call a lagging indicator. So if we'll look at the Python script, at least the TradingView one in a minute, but generally it's a lagging indicator, but we've called ours in the code dynamic because it's continually updating. So there was quite a few of us did another strategy with another mentor, and you had to physically draw it in. And as soon as you drew it in, basically was obsolete because price on the next bar would have changed and that could have affected it. So our one does move, and I say I've smoothed it out now so it won't jump around as much. But it is lagging in most cases. But I say with TrendForce, this will continually update with the latest volume information. And so we're going to now show you what is new in the original code. Now, when I was thinking about this today, there's a saying in court that do you promise to tell the whole truth, the truth, and nothing but the truth? You may have heard that expression. And so with the POCs we've had, it is the truth, but it's only part of the truth, and we're going to expand it. So I don't know if you've noticed already. If you go to your indicator now, we're going to show you what's new. If you click on settings and you scroll down to the POC, you will see there's something new here. So this is going to be continually unchecked. We don't want to overwhelm people with a lot of lines when you first turn on the chart. But this is new. The POC, the color, that's changed. But what we've added is show VAH and VAL, these yellow dotted lines. So I'm going to click on those now. And what you will see, and I'll explain exactly what it means. So what we see now is we have two other sets of lines that appeared on the screen. And so VAH and VAL. So VAH stands for value area high, and this lower line stands for value area low. And I'll spend a bit of time explaining that. And so basically, the POC is part of what we call volume profile. And so volume profile is continually checking the volume at every level. And in TradingView, there is a indicator for that, a little tool. So I've already brought mine to the front, but if you click on this item over here and you scroll down, you can see fixed range volume profile. And so this is a tool that's already on TradingView, but again, this is not dynamic, this is fixed. So you'd have to keep plotting it and upgrading it all the time to use this one. But if we clicked on it, and basically we can now, let's just match our indicator. If we just drew a line like that and across to there and you click, then it's going to show you basically this fixed volume profile. And you can see it will work across any time frame. If I click 3 minutes, I'd have to adjust it, move it in a bit. And let's just move it over there and click. You can see price is quite dynamic at the moment. Now, my one is updating all the time. So on the 3 minute, it's exact. So you won't be able to see this is value area low, and it's overlaying my yellow dotted line. The POC I've made purple, the TradingView one, and it's basically almost on the overlapping mine, and here's value area high, very close. Now, sometimes there will be a difference. So basically, let me just explain this first. Here we got the buyers and the sellers, what's going up, what's going down. And this is giving you the volume at every level. So we can see here, for example, at this level where the POC is, where the value area high is, we can see there was a lot of selling volume over there. Right now, the POC, these are nodes that produce out. They're called nodes. And the one that sticks out the furthest is where the POC is. So this bar on the left is showing us here that there are more sellers than buyers at this level. That's where things are concentrated. So that tends to move around quite a bit. As I said, this one is static. But this is the key thing to understand how this is formed. If you clicked on this one, for example, and went to settings, it'll give you a breakdown. So basically, value area volume is 70. So I want to explain that number. That's a number to remember, 70. So what that is telling you, maybe I can click this off now. I'll just delete that. 70 is where 70% of the volume is currently being traded. And so that's important to know as a trader. So between the value area high and the value area low, this gap over here, which is called the value area, surprisingly enough, this is where 70% of the volume is currently trading. So when we trade, we would want to know where most of the volume is centered. So always these lines give us the extreme of the 70%. Now, in pure mathematical terms, 68% is like the mathematical term, but it doesn't make any difference. We round it off to 70, and there's a good reason for that, because the industry standard is actually 70. And so because of that, traders will be looking and make decisions based on where these lines are, the value area high and the value area low. And so this is huge for things like support and resistance. All right, so we can see that basically trading is centered here on the POC. That's where most of the volume is. Then 70% of all the volume, again, is between the value area low, this lower dotted line, value area high. That means above here, there's only 15%. And below value area low, the 15% will probably be way down near the bottom. And so this is huge for making decisions. So also these lines are huge for support and resistance. So we can see right now, if you just have a look here, price broke through the value area high and it came back, and you can see it double tested it twice. I'll just make it bigger so hopefully it's clear on the zoom. We can see price came and it retested it before it broke down low. And currently the value area low, this is where price is reached, and that provides a lot of support. So these lines are also huge for support and for resistance. Now, sometimes with this indicator, I just want to mention now, let me just put this, I'll just put on the volume profile again quickly. Sometimes, let's just see what it's looking like now. sometimes you will find the POC will jump up and down, and that's because when you have two nodes sticking out that are very similar. So if you have a node over here, and let's say this node stuck out, just increased over there, or the other way around, say the POC was here and the node was there, then this one jumped out, then the POC will jump suddenly. But that's because it's very, very accurate. So if it does jump, it means that now the POC, the point has changed. So again, this is huge for support and resistance, and it will be different over different times. So what I'm going to do now, just to speed up tonight, I'm just going to turn off the POC on the indicator. And because I've pulled it out as I do when I often teach, I've pulled out a separate one that's exactly the same. I'm just going to turn it on so we can look at price also without the indicator and get a handle on price. But obviously this is different on different time frames, because obviously this is a 3-minute chart. If we put it on, let's say, a 5-minute chart, the POC may be at a different level. We can see it's a bit higher up now on the 5-minute chart. It's shifted up. And I'll just turn off the indicator so we can have a look. Turn off the indicator. You can see that on different time frames it will be different. And generally, again, the higher the time frame, the more accurate it is. But again, if you are trading, for example, on the 1-minute chart, what you see will be accurate on the 1-minute chart, and you should make your decisions right there. Now, here's a good teaching point. I'll come back to this a bit later, but look here. Price doesn't always drop below the very low or the very area high. So we can see here, price dropped and retested, and now it's moving down again. So without these dotted lines, the value area low, put on the indicator again, it may not have been clear what price was pivoting off, but yet we can see it is because of this line that's been plotted. So we'll see on different time frames, it'll plot in different places, but it's very helpful for price forecasting. Let's go all the way to the daily. So it's good to know where the daily POC is, where the value area low and value area high are. So if we look now on a daily chart, we can see, well, this is very interesting. We can see here that the POC is way down near the bottom of this last move up. There was a big pullback into the 3 times high zone. That would be the equivalent of a 3-day zone. That would be an 8-day zone, almost a week. And we can see again, look at how price pivoted off the value area low, and then we got a signal. Price moved up to the value area high. We can see there's a lot of activity there. And then price again has moved up from the value area high. So we'll talk about that in a minute. So different on different time frames. So here the POC is sitting way down. Price is now, where is price at? We said about 47,000 on the daily. Price is, look at that, it's at 44,000. So obviously on high time frames there will be a bit of a difference. So it's good to know, where is the POC? Where am I trading today? Where am I positioned? And also in terms of value area high and value area low. So it looks now, based on this chart, this could be quite a big pullback. Price may come all the way back down to the value area high. So 46,522. That could be a level of interest. And likewise, if we went to a 4-hour chart, let's have a look where it's sitting. We can see that's sitting quite far down. So that's sitting at where we're at 45,895. So again, we can see here this triple bottom off the value area low. Huge, I said earlier, huge for support and resistance. So if you didn't know that, if you took the sell, for example, man, this thing's going to fall off a cliff. You didn't know that the value area low was there, then you would be wondering why it pivoted off and moved up again. So I did actually have this in the original code and I blocked it out because I thought I didn't want to add more lines. But in chatting with Ty, it's so important for us to understand price action, to know what's happening. And so here we can see price moved up to the value area high. It tested it a number of times. You can see the only explanation for this testing on the 4-hour chart, look at these wicks here, couldn't break below the value area high. And then when it broke through, you can see once it broke through there, I mean, it's dropped almost 450 pips. Remember, this is a 4-hour chart, so that's a big move. And so let me just talk about balance and imbalance. So we can just stick on this chart for a little bit while. So those are 2 new words to learn, the difference between balance and imbalance. So when price is moving between the value area high and the value area low, so this whole area is called the value area. So when price is moving in between the VAH, the VAL and the VAH, then the market is said to be in balance. And generally, you will notice that if you watch, live trading, price often just goes from the low to the high, to the low to the high. Continually, it's moving between, and of course, it is adjusting as volume changes. But generally, if it moves between the low and the high, then the market's said to be in balance. But if it breaks below the VAL or breaks above the VAH, then it's said to be out of balance. And that's something to look for, because when price does close above, say in this example, the VAH, then price can really rocket off. So in some ways, imbalance is good. When price breaks these outer levels where the 70% of volume is concentrated, then price can rocket up. So if we just look, for example, if you did if you're looking at doing your forecasting, looking where price was headed, and you were looking and you happened to log on the 20th of October, 11 o'clock, and you saw, look, price has closed on this 4-hour candle, and look what happened when price closed above, the market moved into imbalance, and look, that moved up almost 400 pips, but there's a big pullback. But without a pullback, from there to there, 400 pips, because it broke and closed above. So in our trading, we need to be looking for imbalances to see what price is doing. And then also you do get shapes. I'll just do it again. We won't spend a lot. This is just a little bit technical, but let's just look. Let's just put on I just want to see what shape we've got here. You get different shapes. When the market is in balance, you can see here, the POC, my POC is quite far down. When it's in perfect balance, we get this beautiful D shape. It's like this beautiful, it's called like a bell curve. And all these will be jutting out nicely. So generally, when we try to find an example, when the POC is right in the middle, you get that there's a nice distribution of price. And often when it's at the bottom, you tend to get what's called the B shape, where you almost have a straight line down, then a B shape. And if it's centered around the top, you get a P shape, and sometimes you get a B shape. And that's when you got almost a bit of a B shape. But that's not, not essential to understand the whole indicator for that. But again, when you have two nodes sticking out, sometimes the POC will suddenly jump, like it actually did that on the 5-minute, almost while we are talking. And so again, when we're trading between the two value areas, it's in balance and then out of balance. So let's just have a look again. Let's go look at a 5-minute chart and see what's happening. We can see we're almost getting out of the POC would have moved a bit. You can see we're not really in balance over here. We're still between, but you can see, look how low the POC is now. That could be a sign, if price closes above, that price actually could be moving up again. And so that leads me, we're going to look at quite a few examples. So if we did the volume profile now, you can see, I bet you the nodes would be sticking out. It would be a bit of a B shape. So let's just put that on this, what I'm on, a 5-minute chart. We just draw the volume profile, and there we can see we've got a bit of a node up there, but we can see a lot of activity around this area that's produced the POC. All right, so that is balance and imbalance. So at the moment we're trading between, but if we had a look, let's have a look, let's just move. We're going to look at, well, let me do one more thing, and then we'll look at some signals relative to the POC. So we've talked about balance and imbalance. So between, we're in balance. When we break above or below, we're out of balance. And then two other words that are used in terms of looking at volume and the POC in the valley areas, two things called discount and premium. So those are maybe terms you've heard in trading before. So what is the difference? So here's a very good example. This is illustrating the point 100%. So discount is a term that's used for buys and going long. And that is when price is above the POC. Sorry, price is pivoted off the bottom of the VAL, and it's now beginning to move up again, and it's a great place to buy. So if you're thinking right now, look, obviously we've got to follow the rules, but if there was a buy signal right here, I mean, it's not going to happen with the indicator, but let's just say there was a buy signal or a counter trend signal. Would this be a great place to buy? It would be probably a good place to buy, because obviously we're right at the bottom. But I want to look at, just find another time frame for a better illustration. I want to find one where we're way below. So let's look on the 1 minute, trying to find good examples as I'm going on the fly here. Let's try 15. Okay, here's a good example. Wow, look at this. This is a good example for illustrating what discount is. So discount is when you can buy and you are far below the POC. So this would be called a discount setting. All right, so if you could enter a trade, I'm not saying do it, clearly, we're very bearish now. But this would be, if you could buy, this would be a premium place to buy. It's called premium. Why? Because we're way below the POC. So what the market is telling us on the 15 is that right now, the Dow is worth 47,361. And right now, the value area low is way down at 47,016. So this would be a great place to buy. I mean, you could probably think about it. For example, if this was, I know Ty's an Audi fan. If this, for example, was the chart for an Audi car, I'll make a simple example. And let's just say the Audi car went for $20,000. The POC then would say most people would be happy, to buy and sell around about $20,000. But if, for example, Audi came on the market for only $10,000, that would be a super discount. You'd jump and buy it straight away. Why? Because it's way below the value that the market is telling us. So for Audis, the market may be telling us the value is 20,000 right now. Man, there's an Audi for sale at 10,000. That is a real good discount. So that would be a great place to buy. So it won't often happen the way obviously the market is structured. But every now and then you'll see with counter trend signals, if you get, for example, if there was a counter trend buy on the 15 and we way down on the POC here, way down at value area low, the chances are the price is going to wind its way back up. That's a great place to trade. And obviously we want to stick with trend. We talk about counter trend next week, but that's an example of premium. If we, of a discount. Now premium is the opposite. So if we let's look at the example, 5-minute chart. I'm just going to scroll through to see if we can find what was on the 1 minute. I mean, price is quite low now, so we're not going to maybe find an example. Let's go out to the 30-minute. Let's see. We're probably not going to find in these market conditions, though. Everything. Well, look, we can just go back. We will go back and have a look here. For example, over here, we can see there's been on the 30-minute, we've been this huge move down that came this morning around the open. If you're positioned over here, this would be called premium because you're right up near the value area high. And so maybe that's not a good example. I'm trying to find a good example. So we haven't got the best. The market's not. Let's quickly look at the NAS to see if we can find an example. Gee, everything's falling off a cliff, eh? Let's look at the 15-minute. I'm probably going to have to go to a signal to find out. But basically, what premium is when price is way above the POC. And you can enter a trade, and then there's clear space down to get to the POC. So for example, if the Audi, the going price is 20,000, and price is sitting way up at 30,000, you're going to want to sell your car because you're going to sell for a premium. And so when price is way above the POC and you can get into a sell, it's often a guaranteed trade because price is always going to return back. So let's just go back to the NAS. So what I want to do now is just look at a few signals. So practically, we're going to evaluate. I want to see if I haven't even looked at my notes. I had some good points, but I'm just kind of know this off by heart. So I've just been waffling along. So let's evaluate some signals to show what the setup would look like, because obviously this is changing. It hasn't really moved much while we've been talking, but these levels are going to be changing all the time as price moves up and down and as volume changes. But if we just go to the open, so I'm going to put on my replay feature and let's look at the open. Let's start a new one and go just before the open. So I'm just looking at the 5-minute chart again because it's going to help us to take a good chunk of the market in one go. So this was just prior to the open. We can see the POC was pretty close to the value area low. But that will change. Now remember, this is the 5-minute chart, so there's a lot of volume on each candle. So let's click as we get, now there we go. So I've frozen the screen. Now, can you see this would be a very good trade to take in terms, let me just really blow it up so we can see what's happening here. So we can see, I mean, obviously for a number, if we just put on the MACD, you can see this is what we'd call a very good setup. We can see that everything is bullish this is the 5-minute signal. We got a real golden setup. Everything is, all 6 zones are bearish, which is great. So we don't need to get sidetracked. But if we look at exactly what's happening here, the sell signal is below the POC, which is good. And the sell signal has also come after prices close below the value area low. So you can see price almost was in balance. We can see here from this point, price hit the value area high, came all the way down to the value area low, came back up to the value area high. Gee, it feels like I'm singing high, low, high, low. So that is often how price moves. So that should be in this zone here, the market would have been what we call balance. But as soon as it breaks below, it's imbalance and it closes below. So for example, this is a good sign that a trade's going to move, that it's broken below value area low. We've got a sell signal below the POC, check. We're also below the value area low. And so that obviously would have been a great move if we just played, can't remember what happened on the 5-minute here. That would have been a great trade. It was a slight pullback. And then I think price rocketed all the way. I mean, that hit TP3. So if we just press pause right there. So although this is a 5-minute candle, you would have gone a bit later than the 3-minute. There was, 273 pips to TP3. Now we can see that is dynamic. So we can see this has moved lower. As price moves lower, you can see these lines will adjust. So we can see that POC moved higher, that moved lower. That's largely because obviously this is the open. So this is the New York Open where there's a lot of volume. So we'll expect these lines to move a lot in open market volume. But again, you can see, let's just go back and watch when the POC changed. So we broke below the POC. Now remember again, when you get a signal, let's just click the signal on. It's on the next. What's happened now? It's gone too fast for the signal. It's okay. This hold it on. Let me just start the playback again. We'll just start. The playback couldn't handle the volume. So let's just put that on again. Replay, start new. We'll go just before. Now we just want to keep an eye on the value area low to see when it changed. So we'll just click. Let's just see if we can keep up this time. Here we go. Stop. Okay, so on the signal, we can see it all. There was a little flurry there. On the signal, we're below. We're below the POC. We're also below value area low, which is good. Produced a good move. So I'm going to just try click and click. So it's dropping. You can see the value area low is dropping. Okay, it was quite far behind. So that's it. Will move with volume. All right, so let's have a look at. So what I want to do is let's just stop this. We'll just press pause here. Let's look at some other signals and see what was happening. So here's another sell signal. So if we just move our bar, so let's evaluate each signal, because remember now you've got these lines on your chart. So it's good to evaluate signals before they come. So here's almost a good example. So we can see, price was mainly pretty balanced, breaking a bit above and below. We can see here's a good example of price action. Can you see in this period here, look how strong this value area low is. On the 5-minute chart, all we've got is wicks really. Nothing could break. The candles basically closed on the value area low. So when I said earlier they're huge for support and resistance, they are. We can see price moving up, down, up, down. And so it's pretty balanced with just the wicks closing below. But let's look at this signal to see. I can't remember what's happening. I'm just going along with it. So boom, there we go. So let's evaluate this sell signal. There was a pullback there, but there also were some good things here. We can see again, the signal is below the POC, and on the signal, price did close below. There was a pullback, but let's see how that trade played out. So sometimes there will be a retest, but on the signal, we were well positioned for that trade. That was a good sign. So it didn't go that far. I did a pull down again. Let's see, did it get down to hit TP1 just about? Let's call that TP1. Whoop, there we go. So you can see the trades the setups that follow the POC normally have good moves. So that was a nice trade. So this is a 5-minute chart. I mean, that would have opened a little bit higher, but that went down to 187 pips. So let's just look at a counter trend trade. So here's a bit of a, well, there was a big counter. Let's go to the counter trend. Let's just have a look at a counter trend. We're doing good for time here. Then we'll have some questions because you will get counter trend signals. So there was a big one. Let's just see what the POC was doing at the bottom of this move. All right, so let's get replay going again. Start new. So where was the POC before this counter trend move went up? So this will be interesting to play out. So right now we're far below the POC. Price was still dropping. Let's just get to the bottom of that move. Now you never know when the bottom is. So we can see we're still below. Can you see, look here, price stopped right there. So can you see how price, if you're in a counter trend and may not always be this far below, but this was a very big move. But you can see the first place where price stopped was the valley area low. So again, they're huge for support and resistance. But if you're coming from the wrong side, so here we're coming from underneath what should be a support line, it turned into resistance. And you can see on the 5-minute chart, 1, 2, 3, 4, 5, that's 25 minutes. It's spent around valley area low. So these are huge for support and resistance. Let's just see how that played out. Again, we can see, again, rejected the POC. Now we're up to the POC. That's changed. And I know it went very rangy after this. But we can see again how huge price is for support and resistance. Look, if we just look at how price is hanging around the POC. So you can see what I said earlier is this, the POC tells us who's in charge. If price is above, the buyers are in charge. If price is below, the sellers are in charge. And here we can see range. Prices continually moving above and below, above and below. And we won't spend a lot of time on this trade, but you can see that no one could really take charge there. Range. So let's maybe look at another signal. That was a counter trend. We can just go randomly back. And I think it was, let's look at this. There was a big buy. Let's look at this buy signal. Let's see what the PRC was doing here. So let's just go. This was obviously a lot of volume. This is pre-open. So if you were trading now, you'd be interested to see what the PRC was doing. So you can see again, the market was, you can just see again how prices, most of the volume again, 70% of the volume is between the valley area high and the valley area low. So we're about to hit the open. So in 15 minutes, that's 3 candles time. So let's just see what happens. Now remember, this is going very quickly, but stop. Okay, so the buy signal plotted and unplotted there. So, but you can see what was good about this signal, that when the buy signal did plot the move up, we were above the POC, but you can see here, look how strong the valley area high is. It tested it twice, so that's 10 minutes of trading. Tested it twice before it moved up. And then I think that basically took off once it broke above. So remember, this area is balance. So when the market is in balance, price could have pivoted off and come down, but obviously the volume. So it's something to remember that if you have a setup like this with the New York Open, a lot of volume, price is highly likely to break. So once it closed above the valley area high, we can see our price rocketed up because the market went into imbalance. So we like imbalance. When price breaks and closes above or below these valley area lines, it works really well. Maybe let's find one more signal. This is going back looking for random signals. Well, let's just look on a 1-minute chart. Many of us trade on a 1-minute chart. And let's just have a look at what's been happening. This big drop. That was the, well, gee, look at this. This is why we've been talking. Look at the signal. Oh no, sorry. What's happening? I'm stuck on the replay. That is funny. That is so funny. I thought that was a laugh. Wouldn't have expected price to move like that.
That's what the 1-minute chart was looking like during that 5-minute setup.
Yeah, gee. But let's have a look. If you were trading in the afternoon, it's not always, I was saying to some of our community, I think Celine and others, there's not always a lot of volume in the afternoons. But wow, look at this. So let's look at this signal here. Just look at 1 or 2 1-minute signals before I hand back to Ty. So let's go back to our replay feature. Start new. Let's see what is happening prior to this signal. What was the market doing? We can see here for quite a long time. You can see again, the market was pretty balanced. We can see, highs. You can see again, price goes from valley area high to low, and didn't reach it again. But then we can see it's making lower highs, which is good. Another low high. So let's just get the signal on, And let's evaluate this signal. Boom. Wow, look at that. So at that point, now remember, it would have played out much slower. This is like less than 1 second a signal. But if we evaluate this signal, was this a good signal in terms of the POC? Absolutely. Look at this. So we're below the POC. On the sell signal, we broke below the value area low. So we like imbalance. We love that. And so that would have been a good signal to take on the 1 minute. And let's just see how that trade kind of played out slowly but surely. So because there's not a lot of volume this time, it wouldn't have dropped like the open, but still more volume than usual. Obviously, a lot of uncertainty in the markets. So that hit TP2, and let's just see, we play it out, see if we come back and visit. There we go, look at that. Let's just freeze it there. Can you see again? Look at price action. So this is going to help us all. I said in a little advert, this is going to help us with price action. Look how price comes up to the value area low in this case and retests it. So normally here it's acting as support. Here it's acting as resistance. It comes up, retests. So if you are in a trade, and I mean, I wouldn't, stay in a trade if I was, 1,000 pips below value area low. But in a case like this, price is broken below, that's giving you a lot of support. So that can help us stay in trades, or maybe it reversed after that. Let's see what happened. No, still, look at that. Wow, look at that. So that was very quick, but you can see what happens when price breaks below. Let's just go back. Don't want to take too much more time. I'm sure we got the idea. Let's just pop in the POC over there, see what is happening. So at this point, price was retesting value area low. Let me just slow this down to 0.5. Let's just look slowly what happened here. So look here. Price is retesting value area low. And then look at that. Retest, pivots off, test it again, and boom. So these are kind of things, memorize. So at this point, the value area low was just slightly above. That's what I love about, these candles. It tested it exactly. It did move slightly down with the volume, but these help us to stay in trades. And so I think I've covered almost everything. So let me just think. I've made some notes, and I think I've covered basically everything I wanted to cover. I will mention a little bit more when you do counter trend trades next week, because this will help us with counter trend trades. But hopefully we've learned something tonight, and you guys will enjoy the addition of the lines. Now remember, the default is off. So I'll just close with this before I hand back to Tara. Maybe there's some questions. So if you go down to the POC, this box is off. So I'll just turn the thing on again. So show this is off. So you need to actually click that on when you update the new indicator. And then that will then obviously update. And then you can now trade from tonight, knowing the value area high and value area low, and what are good signals to take. So I think I've covered everything.
Really good. Really, really good. I know some people have maybe never heard a breakdown of volume like that before. So good questions. If you're ready for them.
Yep, fire away.
Firstly, let me just check. Vic has asked a good one in relation to overbought and oversold, question mark. I mean, that's obviously terms that come from like an RSI. Yeah. How would it compare in your mind to those kind of conditions?
I mean, it's two different things. I mean, they're different concepts. So basically, if you do follow the RSI, it's not part of our strategy. But for example, where's a good sell? Well, the signal here. So I haven't got the RSI on now. So ideally, you'd want the RSI to be overbought. So you'd want it to be above 80 before you take the sell. I can't remember where it was. It wouldn't have been here because we're far away from the last move up. But they're two different things. They're not really related. Ideally, before a sell signal, ideally with the RSI, you'd want to be overbought before a sell signal, and you'd also want to be below the POC. So, I mean, they're not really related. I mean, they're two different things, different strategies. So I don't think I can
in that sense, because I know you know the back end of it all. How would you even describe what an RSI is actually measuring? Because it's more about momentum than this is actually volume.
Yeah. It's purely measuring momentum, and it's showing when a market is overbought or oversold. So it's got a scale from 0 to 100, and if price goes above 80, it's said to be overbought. If it drops below 20, then it's oversold. And so the principle of the RSI is you want to try get into signals that have soon after price has been overbought. I mean, if we put our RSI on now, we would definitely be way below 80 down the middle trending. We could almost be, down the 20 mark. So basically, this is more dealing with volume, the POC, and giving us some extra support and resistance help. Whereas the RSI is mainly focused on when to enter a trade. This is, helping you maybe also enter, but then also to stay in a trade.
Yeah, and people use RSIs for things like divergence and spotting, trying to put on a scale when things are overbought or oversold. I've heard some guys, to be honest, tear that apart because when you think it's overbought, it could still just go higher based on things like volume, because volume is the actual orders that are being placed. So, hence why we don't use an RSI. But MACD is just way more info that we're able to provide, thankfully. Yep. But volume, guys, if you want, I mean, essentially we're seeing the orders that are being placed around a certain area, and that is a big deal. Like that's where that's where people are deciding, this is where I believe I want to go short from. Because think about some of these orders that are going in, they're not necessarily market orders like we might be placing and we're jumping in straight away. Some of those orders might be what you call market orders or limit orders. So they are putting their orders at that level, waiting for price to come back to that area to execute potentially a sell or a buy. So for a lot of us, we're scalping quickly. We're pushing a market execution so that we can get in a trade straight away. But sometimes people are placing limit orders where they're placing them at a particular level, waiting for price to come to that level based on price alone and a few other factors. But obviously, they're not looking at what's happening in between where price is and the order that they're placing. So we're a little bit more microscopic with the way that we interpret things that happen in between to have a bit more of a sniper entry. Becca says, perfect. VAH, VAL is pretty spot on from what I've seen just this afternoon. Great value, guys. Cool. Love it. Oh, yeah. So you got the notification when I updated it this afternoon. He's been watching it already. Very cool. Weren't too many other questions, to be honest. That's, if you're new, there's plenty for you to take in there. And that was a signal going off on something, probably a strong buy signal on gold. There we go. It was. I've got certain alerts set, so gold's doing something at the moment. But that might be that, guys. We've got one more announcement to make, but
let's look at gold quickly. Gold.
Oh, yep. There we go. Still underneath 4,000, guys. Yeah, I've got a thick white line on my chart on the 000 level of 4,000. So we've been meandering underneath it a little bit for the last little while. I haven't really been paying too much attention. I've just been catching up on editing. I'm trying to get our live event footage sorted so those that missed can watch. And but yeah, watching gold kind of do a little bit of sideways action.
It's tested the value area high 3 times.
There you go. Be very interesting to see if we're going to break back up. I think we got quite a big week, guys. So I'm not too sure of the logistics of the midterms. My wife was talking about it this morning, but that is potentially some element of indecision, of not sure what is next for some people. So that often can lead to, indecision usually equals range. We also got non-farm payroll, I believe, later in the week, NFP. So that's Friday night, Saturday morning. And that is normally huge as a monthly on the charts. So yeah, some big things coming up ahead. Otherwise, speaking of live analysis, though, Dad, you want to unshare your screen? Because for recording's sake, then at least people can
stop sharing. There we go.
You and I talking. There we go, the two of us. Back on it. So we messed around last week with the news event to go Thursday morning for our live analysis instead of Friday, because we actually used to be Thursday when we first fired up. So we thought we'd trial some more Thursdays and see how they go and just take it from there. It's kind of nice in the middle of the week, and then yeah, just Dad and I thought we'd give that a go, see what it's like. I've got a little bit less on a Thursday than I do on a Friday with not having to race off and feed kids and tennis and all that jazz. So that's what we're going to do this week, guys. We'll put it in the chat, as always, the night before that we've got live analysis in the morning, and we'll keep you informed. But otherwise, that's all I can think of right now.
Yep.
I think there was a question earlier on. I think it was Annette just asking about resources like the system PDF and things. Obviously, guys, if you signed up through the website, you're getting everything structured and emailed to you piece by piece. But for those of you that got involved before the website and you're not getting billed through the website, then our resources I've posted in the chat. If you click on Messenger, like at the top, the name of the chat being TrendForce, if you click on that, you'll see a bunch of options in there. One of them being pinned messages, and then you can see a list of all the top 10, whatever posts that I've made that are resources that I bothered to pin. So you'll find in there the YouTube playlist or all the recordings that are worth paying attention to, the system PDF. I'm pretty sure I've got the basics PDF in there as well. So just some helpful resources. If you're trying to find them, that's where you can find them. Otherwise, that's probably us. There we go.
Yep.
Daniel says Thursday mornings are great. Thank you. Nada, thanks, Tim. Ty, value as always. I love it, guys. Appreciate the encouragement. We're still trying to fine-tune some ideas around a live event to end the year off. A few things to line up. But toying with idea, we do really want to do like more of like a half-day workshop type of thing. Feeling like this time of the year might be easier to pull that off early next year than the closer we get to Christmas for like trying to pull off a half-day, all-day Saturday. So we're still very open to that. For now, we're thinking we might be able to pull off something very similar to what we just did, like a Sunday night, potentially the end of November. 29th, potentially. We're just toying with some things. We both realized in hindsight that day in December that we threw out, we got like 2 family birthdays, so we just got excited, Dad and I, and forgot. But then open to this idea. Let us know what you think of us all, at least in Auckland or nearby, getting together maybe even for a dinner somewhere, like an early, late afternoon, early dinner. There's a really cool place in Clevedon that I'm thinking about where we could all maybe just get together and have an end of year hangout and a meal if you guys are keen. So let us know if that's something you're interested in. We'd love to do it if you guys are keen. Otherwise, we're getting pretty close to 9 o'clock, so we'll wrap up there.
The POC lesson worked very well on gold. It's pivoted off the value area.
Yeah?
You would have known that before.
Yeah? Okay. Well,
So-
everyone's going to probably go and watch that then and see how gold's performing.
Have a look at gold in the 1 minute. It tested the VAH twice before, and then rejected it. So anyway, that's
cool.
interesting.
And there was a question today, guys, in the chat about, the afternoons and when the volume is and etc. So what we found obviously is, the US 30, if you're trading that, look, if you're brand new, let me rewind. If you're brand new, I suggest focusing on the NASDAQ, the NAS 100, the US 100, it's all the same thing. The NAS, that is one of the most polite charts that we've traded in the last sort of 4+ years. And it's a good place to start. The thing, it works best when there's American volume or London volume. So London is on pretty much now. So our evenings here in New Zealand, London volume, the London markets kick open. The NAS moves pretty well with London and New York. Not as much with the Asia and Sydney Open. It's the top 100 tech stocks in America, and they seem to have, historically, from what I've seen, way better movements with London and Asia. With London and American volume. Still can move on Asia, but not as much. The Dow, the US 30, the Dow Jones, that would be the sort of the second chart you could potentially move to. It's also references like being called the Dirty 30 because it can have some aggression to it. That definitely performs best with American volume. So the American session, which obviously fires off somewhere around 3:30 in the morning for us here in New Zealand, and then runs all the way to the close. That's the best session to trade that. Does get some movement on London, but far better on New York. Then gold, what I've enjoyed for the last couple of years, moves, you can experience moves on almost any session. It can be a little dicey at the open of Sydney when it's just the beginning of the trading day. You can sometimes get I know when the market's open because I sometimes get an alert straight away on a strong buy signal sometimes where it just opens up. But then when Asia opens up sort of 2 in the afternoon, that's when you can get some trades into the afternoon, into the evening. I've had some great sessions on it, on the London session at night recently as well. And obviously it moves with New York. But I've also found at the second half of American volume, the second half of the end of the trading day, so to speak, for America, that's when gold seems to have had its move and can range quite a bit and be a little less trendy. So just go and have a look. Find that thing that suits you best, depending on your time zone and when you're hoping to trade. If you're brand new and you want to trade the middle of the day, afternoon, evening, then you could look at gold. It's going to be a little more tricky and you have to have get used to it, so to speak. It's not going to be as polite as something like the NAS, but it is something that you can learn, and we have plenty of people that trade it in the daytime. And there's also things like the Nikkei, which I've never really traded much, but also moves with obviously Asian volume. So more than enough waffling from me. Hopefully that answers a few more questions that we've had. Otherwise, guys, drop them in the chat day to day. We'll do our best to answer them as fast as we can. Once again, massive welcome to all of our new students. So good to have you guys with us that have joined this week and the last couple since our last event. I'll hopefully have that event footage up ASAP and you guys can all watch that missed out. But otherwise, have an amazing rest of your evening, rest of your week. We'll see you for Thursday morning. We'll catch you in the chat. And Dad, once again, thank you so much for the update, the education, all of the value behind the scenes, constantly dropping. Really appreciate you. Love you heaps. And guys, that'll be us for tonight. Trade safe. We'll see you in the chat.